When you said the U.S. powers on, I took that to mean that that this year will be another good year in the United States, but I thought it meant maybe not quite to the level of last year, in your view. But you're saying the U.S. is the important part of that statement, that the U.S. will power on maybe better than the rest of the world?
Yes, we've had that investment theme for well over 15 years. So the idea is clients should have more equity exposure than market cap benchmarks would suggest. So we start with the premise that one should be overweight U.S. equities relative to developed markets and relative to emerging markets and relative to China specifically. We generally have had that view, and that has served our clients very well. If you think of U.S. equity performance versus other markets since the trough of the global financial crisis, you're looking at U.S. equities up 16%, developed non-U.S. up 10%, emerging markets 8% annualized, and China 6%. So if you had 100 million, you'd have just under $1 billion today if you'd invested in U.S. equities. If you had invested in China, you wouldn't even have a quarter of that. So the main theme is invest in the U.S. because of its ability to generate incredibly strong earnings growth and incredibly consistent and persistent earnings. That's what differentiates it, because it's such a big, diverse economy.
What goes into your bullish thesis this year? It's an election year. That's pretty good. Do you think last year was surprising to a lot of people? Maybe you were more bullish than most of the street, but almost across the board, it surprised people how strong it was. Would you be surprised if we equaled that performance in the United States in 2024?
If we had a market that was up 26%, it would be very surprising. Our good case is up 13%. Our base case is up 6%. Last year, our base case was up 13%. Our good case was up 27%. So clearly, if we reach the kind of numbers we had last year, it would be an incredibly positive surprise.
What would be the fundamentals that would drive that? I mean, obviously, there's technicals like an election year, but would it be 6 rate cuts? What if we only get 3? Would it be no recession? What if we do get a mild recession? Would it be earnings growth of 10% plus? What if we don't get that? Would any of those things cause you to think we could have a flat year?
Our base case is that earnings grow about 6 to 7%.
6 to 7.
So that's the
How many
anchor.
Fed cuts?
And we have 4 Fed cuts.
4.
A little bit earlier, before the Fed pivot, we were at 3 cuts.
Okay.
So we've increased by only 1 cut. There were people who increased by a lot more. Our base case in our view was 3 cuts and now 4.
Sounds like Larry Finkel's on the other side of that if you were just listening to him.
I was listening to some of the things he said, but I was in your studio in the back.
I mean, he was making the argument effectively there might be even less.
Less than that.
Less than 3.
Right.
Well, I think if you agree that the inflation trajectory is downward and PCE is going to be a little bit lower than CPI, as it has been for the last several reports, then generally you would say inflation is heading towards their targets.
Right.
And
no,
at some
his
point
argument was he
he
thinks it's just going to hang at 3 for a persistent and long time. And that they're not going to necessarily feel like they have to, you know.
But to get to 3 from where we are today is a lot of cuts.
Right.
How do we get to 3 if they don't cut a lot, right? So I'm not sure the logic.
Right.
I mean, I didn't listen to everything he said, so leaving that aside, but you have to get down by a number of cuts to get to 3. Maybe he meant 3 is the long-term neutral rate?
Oh, no, on inflation.
Oh, and then he doesn't think we're going to get below 3.
Right, he doesn't think we're going to get below 3, so there's not going to be a need to be cutting.
Well, I think if you look at the goods component, you're seeing that inflation come down. So what held up the latest CPI number? A bit of housing. All the more current, latest indicators on housing, whether you're looking at rental, whether you're looking at Zillow rates, is headed downwards. And we know that's a very big part of CPI. So one has to have a very compelling argument why you think inflation will be higher. And so then the question becomes, do you think we're going to have a much faster growth than about 2% growth in the U.S.? So
I love all your percentages and probabilities. Do you have any probability for any black swan events or terrible geopolitical events, or like the end of the world, i.e. Trump gets reelected? No, I'm kidding. That's what some people would think that would be the end of the world. But I'm just talking about the actual end of the world with what we're seeing in Ukraine, what we're seeing in Iran proxies, Gaza. I mean, it is a dangerous world right now. There's Taiwanese elections this weekend that could cause, I don't know, even more instability in that region. Do you have a 10% that something geopolitically could really go wrong? A pandemic, a spreading Middle East war, anything like that?
So when we go through the risks to our outlook, we basically go through a series of items. The number one risk that we have this year is an escalation in the Middle East. So we have the Israel-Hamas war, and we're saying we're already seeing some regional escalation, and we published the report before the strikes on the Houthis. So obviously we are seeing some escalation. Nobody wants...
Before anything real serious, we already have ships going all the way around the tip of Africa.
And so that would be a risk. The risk would be to oil prices. The risk would be to basically equity risk premium. The risk would be all risk on all risky assets would underperform.
But you don't do black swans.
But it's not a long-term issue eventually.
You don't do nuclear. You don't do anything like that if one were to be used, or the grid going down.
No, nothing like nuclear. I think the hurdle for that is very high.
Yes.
We think Taiwanese elections are very important in terms of China's reaction, but the likelihood of China being much more aggressive than they have already been over the last year or so is unlikely. So they'll continue doing what they're doing, going into the no-fly zone, doing things like that. But the likelihood of it escalating at this point is very low.
I mean, you're at Goldman. You have people that can do this for you, right? You get some of your probabilities from other people, don't you, Sharmin? You can't do it all.
We actually rely on very good external experts. So we have a series of people who are geopolitical experts. Some of the more standard ones you would know, like Ian Bremmer. But we also have other advisors. We talk to people in the military, former people in intelligence, et cetera, to get their opinions.